Hey traders, what's going on? Jamie Saettele here. Happy March 1st. And this is the Midweek Strategy webinar with me, Jamie Saettele. So let me know that you can hear me here on SB Trade Desk. And then we're going to try to make some sense of what's going on. Test, 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 test. Can you hear me, guys? Can you hear me? Kelly in the house, all good, says Pete. Fine from Warwick, says Chris. Yes, glad to hear you sounding better. Thank you, Mark. Yeah, definitely feeling better. Thanks for asking. All right, let's get started. So for the last, I don't know how many months, it's been a really long time. We've started off every one of these webinars for the most part by looking at the analog with the dollar back in the 94 period. So I was kind of waiting. I was, I don't know, stubborn, hindsight, whatever you want to call it. I was waiting for a final low, right, in that analog. I thought we would be able to test the lower boundary below 88 in DXY before we got essentially the rally we're getting now, right? That is why I've been so stubborn on the, if you look at all the trades, it's pretty much been all trying to be short the dollar. So that's, it prepared for the reversal, but we just never got it. It's really kind of annoying, right? So close. You remember the night that Euro topped, I was sitting here at the computer. It was during an Asian session, and I was, saying, watch out, Euro, 126, is the level. Like we were looking at the kind of 126, maybe even 126.40. And it just never happened. We stopped at 25.55, and obviously have rolled over since. So, for now, probably gonna kind of step away from this for a little bit. I still think there could be some value there. I mean, we could be somewhere over here, right? That's a possibility. But as of right now, you don't need to know where the market is headed, right? Because it's impossible. But you do need to have, good tactics for setups and identifying levels, right? That is where I am with the dollar right now. So let's see if we can, look at some levels, some really important levels. First, starting with DXY. All right, so let's step back. When there's kind of a change in behavior, right? We need to step back and we need to see where the really big spots are. Well, we did hit a big spot, even though we were looking for a shade lower in DXY. I still do think, and this is kind of an important thing, I still think that the top up here is like the cycle top for the dollar. That's an important thing to note, right? Because there's a lot of people saying, well, you've got the 5 down. We could have this huge rally up here, which is a possibility. I get it. We're going to want to pay attention to like our 200-day averages and stuff like that if we start getting there. But there's some people saying that this is a flat and we're going to go way up here. I don't think that's going to happen. Again, we have the exact length of time and shape is similar with this cycle dollar rally and top back in the 2000s, right? I mean, it's the exact same in terms of weeks, right? So I do think that the right thing to do on a very large scale is to still, pinpoint levels to look for dollar weakness, okay? So where might that be? Well, on this chart, here's the slope back to 2008, 2011 on DXY. And the level that I've really got in mind is probably right up here, right? Around 91.80 or so. If you put the low there from May of 2016, that's 91.90. So I mean, we could say kind of around 92, I guess, would be the big spot. And if we again look at the 75 line from this, that was support actually back in September, right? When we had kind of the first decent low in this entire drop. So that would be a level that, I'm going to keep kind of front and center for me for 92. Okay. And again, you can take somewhat of a, general dollar direction with this, but it's going to be mostly pertaining to euro, right? All right. So we've got 92 out of the way. Let's look at the daily chart. Got the same stuff on here. Pink line being that where that 92 roughly is going to be. We're going to throw that in there. Hold on here. All right. And if I zoom in, let's even go 240 minute, get a little more granular. All right, so as at this point, again, we've gone through obviously 90.65. We're at 90.84. By no means have we, blasted through the level, but we've done it enough for me to kind of be like not married to the idea anymore that the dollar, or at least the DXY, is going to a new low immediately, right? Like we've done enough damage there. So where would I be looking essentially for support on the way back and near-term resistance even before the 92 figure? So the first level that I really look at for for resistance is probably going to be these parallels within this channel, which most recently would have been resistance back very early in January. Okay, so if you have TradingView, you can just draw the channel like this. Okay, it's just a regular channel, modified shift, which is your regular channel. It's log scale, and then these are the degrees, or the that I have for the lines. So I've got the 50% lines, which I call the 25 and 75 lines on each side of the median line, and then I've got 68. Okay, and then 1.45, which spreads out. Okay, expands below the channel and above the channel. And the reason I have that is because you can see that's going to cross these levels down here, which could actually end up being support at some point on a pullback. All right. So I've kind of got three spots, I guess you'd say, for for DXY, like really near term, kind of talking maybe like 91.30s or so, maybe 91.40 if we get there quickly. On pullbacks, right? Not as clear cut. It's better in euro. Obviously, the first obvious level is just gonna be the former high, but then eventually it's maybe down here. And then the big level that I think we really need to know is around that 92 figure. Okay. So on that, let's bring in notice what we're doing here is a process. We're really trying first to identify the big levels, right? That is what we're trying to do first. And because at the end of the day, that's all that's going to matter, right? Is your timing and your levels. Even with a bad idea or a wrong idea, your timing and your levels are what's going to save you from either losing too much, right? Taking decent losses, small losses. You can survive those. Okay, so these are the square root levels, and it is good to see that one of them actually, 91.32, actually is a square root level. So that's the first level. And remember, we said roughly 92. 92.28 is actually the year open. So those levels make a lot of sense. All right, let's move on to euro then. Hold on just a minute here. All right. So euro, we're going to scroll back and go back to this long-term fork, okay? This is the daily chart. And what we're going to do is zoom in 240 minute, because I want you to see a couple of the slopes in here that are very important. So I just tweeted out an hour or so ago that we were at a level where I think we can bounce a little bit. That level is simply, we got the fork here, and we are looking at this low from 117. Okay, so we are looking for a bounce from here, and we've at least started to consolidate a little bit. Where do I think that there's going to be some resistance? I actually just think that it's going to be back at 122.38 or so, which you can see this median line, which was support, right? That was support back before the break. This is Powell right here. Okay, so this is Powell speaking at Euro breaking. It was support. Look for it to provide resistance. Okay, you know, especially if, you know, we get a, you know, tomorrow kind of in a newsy type market, but, you know, say you get a no big US data tomorrow, I guess, so kind of never mind that. But if we were to have a news type of spike, that's the thing you want to fade into a median line. So for Euro 122.38, again, that's the volume level to know. Okay, kind of the former base down here too. But where are we going, and where do I think better kind of support might be? So here are the parallels. You can see the parallel. One good thing about TradingView is that you change the time frame, and it keeps the parallels on there. It's kind of nice. This parallel, again, if you are on TradingView, you can draw this in. You saw where I drew it from. All it is 25.125.5, right? So all equidistant. And you can see this magenta line, which is the 0.125 line from that fork. Do you see all the touches? Very precise, by the way, and especially coming off of, you know, the decent tops, right? So these are the tops back last fall. And look where we found support each time, right? Now it's a different thing there because we were above big moving averages, the 200 period moving average on the 4-hour chart. We were above those levels, but still that does not change the fact or negate the fact that we did indeed find support at these levels. And this was resistance, okay, as well. Back in, I guess that was late November, and it was support as well. Minor, but still support. So where's that going to be? Well, that's going to be down in the 2090 region, which also happens to be the 1-4 high, or the first day of the year high. We would call that the opening range, you know, for the entire year, and that's a biggie. So that might be kind of like your 92 area in DXY. So as far as I'm concerned, as I sit here right now, like, I'm looking for this bounce in Euro, which we are bouncing, or at least we've stopped going down the last couple hours. I'm looking for it to continue up into 122.38, and then I'm looking for us to go back down to 120.90 or so. At that point, I'd actually be willing to buy it. Okay. After that, if things get really sick and gross, then we're talking probably about 1960s, which is simply the median line from that whole thing, which, you know, has been pretty interesting. Election spike high. You did have support back here last fall, but not nearly actually as precise and reliable as that 125 line right here. All right. So those are the levels, at least in my opinion. Let's see here. What's dollar yen doing? I don't want to forget about dollar yen, by the way, while I'm doing this, because we are looking for potentially a kind of a 107.30 high. Remember the triangle that we talked about last night. Okay, let's go to cable. British pound is probably one of the cleaner ones in terms of its near-term dollar bullishness, right? Headed lower. I'm kind of kicking myself on this one because we did talk about and write about the fact that you had the daily reversal level up here. It was the 618. It was a 5 down. It was a 3 up. When this happened during Asia, on, I guess that was 216, you were getting that euro high, and so you had a big non-confirmation, right, with cable nowhere near the highs. Beautiful level. I never jumped on it. Even going into this week, we talked about maybe 40.80 as a level. Did trade up to 40.70. Either way, good structure. Getting down just like euro to a level where I think you can bounce from. I mean, 137. It's not a buy point for me, but it is a level where I wouldn't want to be necessarily short into it. I think the trade here is to trade back into, or short back into, this median line, right? Now, I get it. It's like 125 pips away. Sounds like a lot, but we all know, how cable trades. I mean, that can happen on a quick Brexit headline or something, right? Which frankly would be kind of the best way for this to trade back into it, would be on a Brexit headline. So I'm going to be leaving orders, like I said in the post last night, back at 38.50. Nothing's changed here, even though it hasn't triggered yet. That can still happen. It can happen tomorrow. It could even happen next week, although next week the line would be a little below that 38.50 area. But if it happens Friday, 38.50 would be a great level to try to short or get short and take it back down, like I said, to the 36.15 area. That is the high from 1.3, just like the euro level at 120.90. That is the first day of the year high. So that is a good spot for some sort of reaction or something to watch out for. And then eventually, we are talking about 2 legs down, would get you down into 35.60s, and it happens to get you down there right, the intersection of that is on March 9th, which happens to be when the seasonality for the British pound actually bottoms, right? So here you go, right? Bearish seasonals, that is the week of March 9th. So kind of a perfect setup to look for cable weakness into, or be a seller of rallies into this, March 9th period, and then look to get bullish, right? I have a feeling that we get down this low. We get down this low and test this channel. We'll be looking at it as simply a buying opportunity. But I have a feeling it's going to be, people are going to be bearish as hell on the British pound at that point, right? Just kind of thinking ahead to, what it looks like. And, the COT stuff too, it's already started to happen. Obviously, we've already started to see COT wash out a bit with some of these crowded positions, notably British pounds and euro. But yeah, look towards that area. 38.50 is the sell. Eventually, probably getting good support around 35.50. All right, that is the British pound. Commodity currencies. Touched on this earlier this week, but we are entering what's historically a pretty bullish period for commodity currencies. The price action's certainly not there right now, right? I mean, Aussie, Kiwi, and CAD are all acting pretty ठीक especially Aussie and CAD. But this is something I don't want to forget either, right? Because essentially we're in a upward sloping channel from 2016 in Aussie, and I don't want to forget that, especially going into a bullish seasonal period, because I'm looking at like an hourly chart and it looks like this big downtrend and I want to be selling it, right? So Aussie after this week turns up. Dollar CAD already kind of, we were supposed to, seasonally wise at least, we're getting into that period, but the wind is at your back from a seasonal perspective on dollar CAD short. And Kiwi, it's a little different. It's like the British pound where it bottoms 3.9. So maybe that 3.9 after next week, maybe that's the level or the time at which we want to be you know, thinking, you know, dollar resistance. Okay, now let's look at the charts. So cleanest one from a very short-term perspective is probably the New Zealand dollar, right? We got a bounce on the median line. We have a very clean structure here, and 72.70 would be kind of where I'd, you know, think failure, to be honest with you, and look for continuation lower. All right. I mean, you could kind of widen it out, I guess, to maybe something like 72.90, 73, which is the week open 20-day average. But that 72.70 area is pretty damn clean. You can see actually how clean the New Zealand dollar has traded with the slopes so far this year, or not the slopes, sorry, but the square root levels so far this year. So again, here's your opening price. And these are most of the levels that you'll see on the in the posts, right? For those of you that might not be aware, when I have these levels right here, all right, let's look at New Zealand dollar, for example. So 71.86, 72.70, right? 71.86, that's the square root level. Guess where we bottomed last night? 71.86. 72.70, that's the next one, right? Then 73.54. That's what a lot of these levels are. Okay. There's also other stuff involved in there, like if there's volume levels or maybe a big high low or something, or rarely a fib. Most of these things, though, are just going to be based on the square root levels, which can work just amazingly, right? I mean, we've topped this year right on this square root level, 74.38. Drop to the next one, 72.70. Drop to the next one, 71.86. Look for 71.70 to be resistance. Okay. And I do think that the best spot to be at least thinking of, you know, being a bull at some point again is probably going to be down on the 2015-16 trend line, right? Just this trend line, you can see not quite support, but pretty damn close back here in May of last year. It was then resistance in November. It was resistance again in December. We broke out and went higher. A tag there, which is very close to the year open, near 71, would just be a great thing, okay? All right, Aussie. So we're going to start with the short-term chart here. We obviously have not held the 200-day average at this point. And as I said in the note from 2 days ago, I really am not going to be a willing kind of, you know, buyer of the Australian dollar yet, regardless of seasonality or anything, until I think we can clear up through the 70, call it 70, 78.50 area. 78.40 is where we open the week this week, so it's going to be a pretty good barrier. But you probably don't get back there anyway just yet. In fact, 77.87 is going to be a major level. That is actually the high volume level from 214, which was the big inflation number in the US, remember. So that's a level that's going to be resistance, I think. Not nearly as clean on the short-term slope as the New Zealand dollar is, but you do have a very clean horizontal level. So probably not going to be trading Aussie given the lack of clarity on the near term at this point, but 72.70, or sorry, 77.87, excuse me, is a level to know for resistance, you know, probably headed into tomorrow. Now, let's step back real quick and look at a bigger picture chart for the Australian dollar. That's New Zealand dollar. All right. So here's what I'm talking about. Choppy and not all that impressive, but still an uptrend. Okay. A very simple observation, but something that I don't think should be, forgotten, really. And if we do get and can get two equal legs down, you're talking near 76, right? Then puts you down pretty close to the bottom of the channel for the New Zealand dollar, or sorry, for the Australian dollar, excuse me. Probably somewhere around here. So just be aware of it, right? Be aware of what the bigger picture charts look like, and the fact that there's a trend potentially being established that you could see us really run to the upside quickly. I mean, we see what it looks like last summer when you get these runs. I mean, they happen fast, right? Even back in December and into the early part of this year. So be aware of the wide swinging supports in the Australian dollar, albeit at lower levels. Definitely not on the radar as far as buying it anytime soon because we're not really close. But I don't want you to forget it. All right, dollar yen. Here's the near-term chart. See, we traded up to the week open at 107.17, and we have not gotten to 30, so who knows if we will. But this is what I think is happening at this point, or just distinct possibility, I should say. A, B, C, D, E, right? It actually reminds me a lot of the dollar Chinese yuan exchange rate from a daily chart. Remember this? A, B, C, D, E. This was the Chinese yuan. This is on a daily chart, and it looks a hell of a lot like the dollar yen chart, but on an hourly. So that would be a fractal, right? If you're going to get an E wave, usually it's going to be a little slower into the top than this. So I would, still not forget about 107.30. But that's all I'm saying is look for this area for a sell, and eventually, get a final low, right? If you can get down into this area, which is this parallel from the April low of last year, you're talking in the 104s over the next couple of weeks, okay? And there is a lot down there. You've got, if I do two equal legs, for example, it's 104.19, right? 3 down, 3 up, 5 down. 104.19 is where we are on a potential two equal legs, and that actually is towards the bottom of the, towards the end of the month. Yes, Mahai, we'll definitely go through the indices, no doubt about it. 105.19 is also, by the way, I believe it's a square root level in the dollar yen exchange rate. And close, 104.14, okay, is the next square root level for dollar yen, or 2 down, sorry. Let's look at one more possible fib relationship. If we go, this is on the daily now. If we do a 618, in other words, an alternating leg type of thing, we actually go all the way down to 102. That might be a little too deep. Might be a little too deep. Anyway, all I care about for now with dollar yen is this 107.30s or what have you, and then eventually a breakdown potentially to the low 104s. Okay. All right, so that pretty much covers the dollar crosses. Before we go to indices, let's look real quick. I said I wanted to show you some yen crosses, right? And there's some super interesting charts, I believe, for these yen crosses. Hold on. Okay, we'll start with pound yen. This is a daily chart. Pound yen, if we look at the channel, right, it's just, you know, something like this. Okay, and something that you want to know is that the 52-week average is actually right now. We probably are going to break below it, right? I mean, I've got, with this dollar yen triangle, if there's any truth to that, you're obviously going to go lower. But just look at very long-term kind of like trends in pound yen. You get sell-offs a lot of times that do end near the 52-week average or spike maybe below it. Okay, I mean, we're going all the way back to 2001 here. You know, there's a lot of periods where you do stop at that average. All right, so it's good to know. That's all I'm saying. Okay, especially if you get like a big spike below it and then on a week and then recover back above it. That would be something wonderful for a longer term type of trade. But wanted to point that out. All right, CAD yen is probably my favorite one, actually. Oh, and I just realized we forgot to look at dollar CAD, so we will look at that. Okay, CAD yen, here's a fork. Okay, this is back to January 2016. I am drawing it off of the Brexit, or sorry, this is the U.S. election spike. So that is something I usually don't like to do, but the levels are there in terms of like the slope being, you know, doing stuff, right? Like you've got 25 line here doing a lot. Even recently, you kind of traded around these levels. I would put that as resistance back at that level, by the way, which is like 85. 75 line, pretty good as well. Your lower parallel is going to be of interest for eventual support, and that's going to be below 81. So still downside there. It's in the vicinity of these lows back in the summer of last year. And if you draw a fib, you get a 618. Okay. So CAD yen, a good looking chart to keep in mind. Aussie yen, nothing good in terms of anything on an upslope at all. Although you do have 5 up, 1, 2, 3, 4, 5, and then A, B, C. So we could be coming into an end with that in the not too distant future. But this is the slope I would watch. It's simply the long-term old down slope connecting the 2013 high, 2014 high. We stopped at the median line. All these months back July of last year and September, and then all throughout January. Basically trade on that thing throughout the entire month before it fell apart. Okay, and then the lower parallel here, which was support back in April last year, is a level where I'd look for support. Again, that would take you below that low and down towards 80.50 or so. So again, this is like CAD yen, and there's, you know, says there's still some decent downside. Okay, and finally, Kiwi yen. This one is probably my least favorite in the sense that really taking liberties drawing you know, something off of these spikes, right? I really don't like to do that, but I do have it on here because it's the same angle, the same parallel, where if you connected a 2013 high, you hit basically the top in 2014. So for that reason, it's something that I would still, pay attention to. I'm just noticing that there is a big horizontal level down there too. And that's going to be, again, around 74.50, right? Can probably add one here too. All right, so big levels, and it's going to be, again, 250 pips lower or something around that, 250 to 300, depending on which level you use. So those commodity yen crosses, right? Those are the ones that are obviously going to trade with risk aversion the most. And this takes us into the indices, right? Which we've been talking about this late, or not late, but earlier March type of low, right? And that is right here. So look, 3.5 is on Monday. If we can get a couple days of panic, like back down to the 26.15 area or something in the S&P, then I think you're talking about, getting those yen crosses to the levels we just talked about. The biggest thing I'm focused on here in the short term is, this line right here, the old resistance line turned support back on 221. If you can get back, if you can get back down there, then you're talking about probably seeing some support. It's a big horizontal level as well. You can see back here is the base in late November, December, on the way. On the way up into the blowout. Near term, there are going to be levels that I'd pay attention to. Basically 26.85 or so is the first one. And then on the upside, this 200-hour average is great. Okay, I mean, the spike this morning failed just shy of it, but we could still try to trade into it at some point, right? Just like over here, we traded into it for a while. We're in a more volatile market now, so the spike, could be it. But I think that we are going down here before I would consider anything on the upside. The DAX, daily chart, I know we had talked about, and I had said that I was going to, be looking for something on the 200-day. That did not happen. We didn't get there. But the median line failure is something. So that for me, again, looking lower, so the DAX has been so much weaker than the S&P that, you can see a scenario in which we get the DAX down on this support, while the S&P is actually kind of maybe hovering near its lows on the retest, right? I think that's something to watch for. So watch for kind of a non-confirmation between various indices, notably the DAX, maybe getting down into the 11,600s. At the same time, the S&P is, nowhere, or not breaking its lows, I should say, but rather testing near the lows. And then the Nikkei is probably one of the cleaner ones from a pattern perspective. All right, we've got the 5 down and then another 5 up, and the Nikkei is really weak today. I was looking for it to bounce a little bit and then make it into this region, but even if it goes there, quickly, I would still pay attention to the 21,289 for some sort of a bounce in the Nikkei. It's a 618 as well as the daily reversal support. So that's the low day close. And don't forget that you do have this just giant long-term support stuff down here, right? Eventually, we should probably get down here. Okay, that's the 75 line of that fork. That's going to be a lot lower. But as far as I'm concerned for the moment, I would think that you probably try to get a bounce somewhere at this fib at 21,289. Dollar CAD is one that we did forget to look at. Okay, so aside from the seasonals, there's a couple things here. CAD data tomorrow, so this will be on the docket for tonight's update. Simply speaking, I am of the mind that we are in a very broad dollar CAD downtrend, okay? In a downtrend, I want to look for places where I think there's a chance that, you know, the trend, in this case down, can reassert itself. Well, the next possible spot for that to happen is going to be essentially 128.79 to 129. Okay, 128.79 is actually the daily reversal level. Again, just draw a close, you know, or sorry, a horizontal line on this close. It's also, by the way, very close to 2 legs up. So if I draw 2 legs up, I get 28.88, 10 pips away, close enough. Okay, and then of course the parallels were on 129. So as you head into tomorrow with, I believe it's GDP. Let's take a look. Yep, CAD GDP tomorrow. Biggest news item of the day. You know, thing with a lot of times you're coming into a level like this. Like what I'm looking for is maybe a quick spike into something, into this level, and then for it to roll over, right? We don't oftentimes get that, it seems like, with the Canadian dollar. A lot of times you get the move and it just happens. It's just like, you know, so I mean, putting an order in front of it is literally just pure gambling. I mean, this is all a form of gambling in some respect, but you know, it's pure gambling. Whatever, either way, just be aware that is the area I am really looking at for the dollar CAD. I want to see reversal up here, and if we get one, you know, again, there could be a short opportunity. I'm sure some of you are probably sick of trying to short the Canadian dollar, but or the dollar CAD. That is where my head is at on this chart. Okay, looks like I see euro spiking up here. Pay attention to 22.38. Okay, that's going to be the big volume level from the other day on Powell. So we're getting close to that level now. On a shorter term basis, if I go to a 4-hour chart, you do have a pretty clean channel up here. Right. So clearly your level, you're essentially trading, you can see you're trading on the 75 lines, it seems. 75, 75, 75 for like the last day and a half. And then the 25 has been pretty good support. So shorter term, the first place, if we did come off of the 29 area, that I'd, you know, say could have a chance at a bounce or something would be this 25 line, which if that were, you know, say tomorrow, we'd be talking about, you know, basically 27.10. So those are the levels that I will be honing in on tomorrow. And then finally with dollar CAD, there is another thing, if you will, up here, or oh, we did not, Kelly's saying, did I fall asleep and miss Euro Yen? No, I forgot that one, so I'll go back and do it. There is another slope here. So again, concept of symmetry. Okay, channel, 25 line support, 75 line is again right at 28.80. So there's just a lot of stuff at 28.80 to 129. Look for a Friday high and look to sell dollar CAD up there. All right, let's go back to, here's that Euro chart. We are, pay attention. It's like 20 pips. Euro Yen, pretty much what I mentioned yesterday, but you know, this slope, just, you know, this angle, I think is where we want to be focused. I still would say that you've got resistance at 31, call it 31.15, 31.20, something like that. That is the 200-day. It's also, of course, the low from back here in November. And the next big support for me, probably the 75 line, right? That was actually, you can see resistance back here in March of last year, so just about a year ago. And that would put you again down in the 28, 20 or so region. Okay, so those are the two biggest levels to look at. You, of course, have a very good looking bearish fork going on here. And if we were to get down there maybe sometime next week, you could have an intersection with, excuse me, with the 75 line that I talked about and the lower parallel. Kelly says, would you short this pair or wait to buy? Honestly, I think both are in play, Kelly. You know, you get up into, first of all, we're getting a lower, what I would call a lower floor, right? So this used to be support. This was resistance. You failed below the median line. You went lower to a lower support. We should probably go to a lower resistance now. It's probably going to be yeah, okay, so this actually makes a lot of sense. So the 75 line, or this is not 75, this is like the 87 half line. But you can see now we're just putting it in quadrants. I would say that your resistance at this point is probably going to be this magenta line, because we should have a lower support. So that would put you, again, probably up near 130, 120, which is what we just talked about on the daily chart anyway. So I would do both. And I think you could use a relatively tight stop. You know, 130, 120, you know, with a stop above, say, 130, 160 or something would probably be enough on this. Okay. And then, yeah, like I said, 28.20, be, you know, buy my freaking pants off at that level. Okay. I've gone through, I think, pretty much everything here in terms of what I had to talk about. Are there any questions on any other pairs or anything? I know it's only 10:50, so we do have some time if you guys would like. Otherwise, we can call it a quick day. Gold, Pooja. We did not look at gold, so let's take a look. Gold has been one big pain in the ass. Like, it's gone nowhere, right? It seems like it's gone everywhere, but it's just screwing with people. Okay, so it looks a lot like the euro, obviously, doesn't it? You got the, you know, got a lower high here, but it looks a lot like euro from this point. And with that, I think that can probably be used to, you know, advantage from kind of a macro intermarket standpoint. What I mean is, like, when we have euro, we were talking about the 2090 figure, right? We were also talking about DXY near 90, I guess it was 92 or something. I would look at gold in the same light at about 1295. Okay, it's actually the next parallel, and 200-day average is a little lower, but you've got really important highs there. So these are highs from last April, highs from last June, highs from November, and that would be a spot where I think if gold is any chance, right, of going higher, that's where I would think you probably need to go higher from. You know, metals have not been all that clear, right, except from the standpoint of, like, when we trade up into the median line, like, we kind of say, well, we're at resistance, but it's a median line and we could very well go breaking through it. At some point, that's probably going to happen, but it's, you know, waiting on what seems like forever. So yeah, looks a lot like euro, at least for late January. Big level, I would say, at that spot. Silver, by the way, always looking for non-confirmation. Silver. Okay, well, they both drop below that low. Yeah, I do not have a good read here on silver at this point. Again, it continues to fail. Just, you know, sometimes there's just sometimes you just don't have anything like good to say about particular market. Like, it's just not there, right? Eventually it will be there. Eventually it'll come back and it'll make sense, and you know, all will be right again. But as of right now, it's just not there. Crude oil is one that I think we should pay attention to, however. So let's load this. Okay, so this is the channel, right, that I think will probably be in play for a very, very, very long time. And look where today's low is. Close to it, at least. Right? So, hell of a sell-off the last 3 days. And so a chance, I think, for crude to actually turn higher here. Anybody else, anything else? Going once, going twice, and sold. That is it for today. All right. Thank you all a ton for your time as always, and hope you took some notes and wrote down the levels, because I do think there are a lot of big levels in play that we have identified moving forward over the next, I would say, really in play probably for the next 2 to 4 weeks, right? With some of these huge euro levels, DXY levels, et cetera, et cetera. Kelly asking, are the Blues making the playoffs? I don't know, man. They've been looking too good. So it's everyone's up in arms about it in this town right now, I'll tell you that. Anyway, that's it. All right, I'm going to get this up in archive for you. Take care, everyone. Have a great rest of your week. All right, bye.